co-founder and CEO of Y2K Credit Solutions, consumer credit expert. Today I want to speak to you guys about Tier 1 auto financing. Tier 1 auto financing. I'm not sure if you guys have heard that term before. Tier 1, Tier 2, Tier 3 when it comes to getting an auto loan. And if you're not getting Tier 1, you are going to be in an upside down auto loan. Okay? So this topic, it's gonna be like a 2-segment topic I'm gonna talk about in this one video. But let's talk about Tier 1 auto financing. If you're gonna go buy a car, and by the way, before I start, I believe we have 4 videos on our YouTube channel about this topic already, but we'll do an updated video. If you're gonna go buy a car, purchase a car, you wanna make sure you get financing from the dealership. In-house financing is called, in-house financing. What does that mean? Let's say you're gonna go to Toyota. You want Toyota financing. Let's say you get a Lexus. You want Lexus or JM Lexus financing. Let's say you go to Volkswagen. You want Volkswagen financing. Okay? So, when you go to these dealerships, you want Tier 1 financing, but your credit score has to be of a 720 or higher. That's the threshold most of these in-house banks are looking for it to be a Tier 1 financing, low down payment, good rate. Okay? Now, if you don't have a 720 or higher, the dealership will shop around for you to find a good rate. Okay? Now, obviously, under 720, they're going to say, okay, let me look at Capital One, Santander's, Ally. What you don't understand or what you don't know and it's not being explained to you is that, let's say you can't get in-house financing for your Toyota. So they decide to send you between Capital One or Santander Financials, right? Either one of those. Or Ally, right? I know a lot of you guys have Ally loans. The dealer, for example, let's say you got approved for an interest rate of 16% for your auto loan. 2 things are happening here. Most dealerships get a kickback from every bank for selling the loan to them. So let's say Santander said, okay, if you send us the loan, we'll give you 1.5 point back for selling us the deal. Or Ally say, if you send us the deal, we'll give you 1 point back. So let's say the rate was actually 16% that you got approved for. You actually got approved for 14.5%. The other rate, the other 1.5 point is being added on because that's what the bank's going to give the dealership as a kickback, the incentives for selling the loan to them. Now here's what happens. When you get outside financing to any of these subprime banks, like again, Capital One, Santander, Chrysler Capital, Ally Financial, by the time you finish paying off for that loan, you would have paid twice for that one car because the interest is so high. So now you're going to be upside down. Now let's not say actually this is what's happening. We have a lot of clients that are coming to our office with repossessed cars. And when we look at the numbers, obviously we can tell that it was an upside down loan. It's a bad loan to begin with, so they can afford it. Now, if your car gets repossessed and you don't redeem it, the car, you have 30 days in order to redeem the car from the bank, right? You have to bring it up current or pay the loan off and redeem the car. If you don't do that, the car is going to go to the auction. So let's say that you took a loan out for $20,000, car got repossessed. And by the way, I hear this all the time. There's no difference whether it's voluntary repossessed or the bank picked it up. A repossession is a repossession. There's no difference. You don't have any incentives or you're not benefiting from saying I did a voluntary repossess. It's a repossession is a repossession, okay? So let's say the car was repossessed and you owe $20,000 on the car when the car is repossessed. 30 days pass, the bank gave you an opportunity to pick the car back up, bring the current, or pay the loan off. You did not do that. After 30 days, the bank sends the car to the auction. Let's say because of the age of the car, the condition of the car, the miles of the car is only worth maybe $10,000 at the auction. So some third-party dealer is going to buy it in some like small city or small town because they're going to resell that car. So let's say they pay 10 grand for the car at the auction. You still have a 10 grand that you're responsible for because the balance was $20,000. Just because that car was repossessed and just because that car was auctioned and they got 10 grand does not mean that you do not have to pay the balance on that loan. It does not mean that. You are still on the hook for that $10,000 because when the bank when you initially got the auto loan and the bank funded the dealer, the bank funded 100% of the loan. They did not fund half of it because you didn't put no money down, right? Or you only paid the tax and the DMV fee. So you're still on the hook for that balance of $10,000 minus whatever they got for the car at the auction. A lot of you guys are asking me this question, why do I still owe it? And I'm like, where's the contract that you have? You guys don't have the paperwork for the contracts. But I have to explain to you guys, you're still on the hook for the balance of that loan because the loan was funded 100% to the dealership, right? So that debt still has to get resolved in order for it to be removed off your credit report. But it's just mind-boggling how some of you guys think that because the car is repossessed, you don't have to pay it back. Or the balance, you don't have to pay back the balance that the bank is coming after you for. That's not how it works, okay? So just keep in mind, when you're gonna go get a car, you want to make sure you check your credit report 30 days before you go to that dealership, just to make sure everything is up to par with your credit. You have the max credit scores. If you need to bring down some credit card balances, bring it down. Also, you can avoid these dealers running your credit 10 times with different banks just to find a rate. But if they do end up doing that, you know to ask them to see the rate and speak to the bank and ask what exactly the original rate was, because the dealers are making money for sending the business to one of those subprime banks. If you have any questions, comments, drop it below, and I'll try to get back to you. Talk to you soon. Have a good day.